All right, everyone. Thanks for coming out. For those of you all who have had a chance to take a look at our credit quiz, we're going to go ahead and show you those answers before we get started so that you can see how well you done on our little mini credit quiz. Most of these questions we will discuss at some point during the presentation. However, there may be a couple of things that we don't go too much into detail on. So just be mindful of that. So first, number one, which of the following most influences your credit scores? The answer to that one was D, and none of those items would actually impact your credit score. So you had three options there, three or four options. The second one, hopefully you got yes as the answer on that one. Do you have more than one credit score? You have multiple. You just have a few that are more popular. Number three, generally, which of the following most influences your credit score? It says while all are contributing factors, the most important thing is payment history. So hopefully you got that one right. The next one, does getting married change your credit score? That's actually a no. Um, now, once you get married and you start combining finances, then it can impact your credit score. The next one, do good credit scores guarantee that you'll be approved for credit? That one is a no. A good score puts you in a better situation, but there are no guarantees. It just everything depends upon the lender. Number six, what is a FICO score? We will discuss that one, but it's basically just a credit scoring model. Number seven, your credit scores are calculated using information from that's your credit reports, which we will touch base on and discuss during the presentation. But welcome to the Financial Wellness Center and our workshop here today. We have hopefully a few interactive things that we will cover, as well as just the basics of credit, so that you can walk away with information that will be beneficial to you and your future. So, my name is Gilbert Rogers, and I am the Assistant Director of the Financial Wellness Center. And I also have Jason, who I'm going to allow to introduce himself.
My name is Jason Feliz, and I'm a peer financial coach at the Financial Wellness Center.
All right. And we are covering building and understanding credit. All right. So here are our learning outcomes for today's presentation. One, we want you to leave this workshop understanding what credit is and how it works. Two, we want you to understand the importance of and how to access a credit report. And then number three, we want you to leave with just a few tips on how you can start building your credit today. And it's extremely important for college students.
Today we'll be covering what is credit, why is it important, what can you do now as a college student, and we'll close up with having an open discussion.
Credit allows you to purchase things that you might not necessarily have all the money for at the time, but things like a car or house or maybe a computer, some things that are essential that you can't afford at the moment, but will be able to pay off.
Right. There you go. There you go. That's fantastic. Great definition. Well, that works. So what we'll do is we'll get back to the presentation and share our definition of what credit is.
Credit allows you to purchase goods and services, and you're making an agreement to pay back to the lender at a specific date or in the future,
Or so yeah, it's that
according to
trust.
bank rate.
Yeah. So according to bank rate, it's an agreement between two individuals, and as Jason said, there's a promise for someone to pay back within a specified time period. So that's according to bank rate, and there are various definitions out there. So thanks for sharing that, Jason. All right. So why exactly is credit important? I think this is what this workshop really highlights, and it's what you all came for. So why is it so important? The first thing is with financial products. So anytime you go and you try to purchase something, as I think Lyle mentioned, anytime you go to purchase something and you don't have the cash to just buy it outright and you have to finance it, then your credit is going to be factored in. They're going to assess your credit worthiness by looking at what you have done in the past. So credit comes into play when you're buying something and you have to finance it. Credit comes into play when you're renting an apartment. So they want to know whether or not you're going to pay on time and if you're going to pay the amount that you owe. So a lot of times apartments and other rental opportunities or rental housing, they will look at your credit, your past history. With utilities, they look at your credit history to see if they need to charge you a deposit, if you need to put money down to secure whatever the utilities that you're getting, just to ensure that they're covered in case you don't pay. So credit comes into play. Also with insurance, credit comes into play because with insurance, they look at your credit history to decide how much money to charge you. So essentially, credit can save you money. If your credit score is high, then you pay less for your insurance, your monthly premiums. If your credit score is low, if your credit score is low, you're going to pay more. But if your credit score is high, you pay less. Sorry, I think I got that backwards. But and then asset building. If you're looking at obtaining real estate or something like that, and you're wanting to buy something, again, going back to financing something, they're going to look at your credit. And then last but not least, something that all of you all will at some point do is seek employment. And as far as credit is concerned, they want to know what your credit is, what your credit history looks like. Now, student loans and things of that nature don't have as much of an impact, but they want to know that if you've had bills in the past that you have paid them on time. And this, more often than not, this happens with government related jobs where they're checking your background and your credit history, but it can happen in private employment. So credit is all over the place.
How is credit evaluated, Gilbert?
I'll tell you a little bit about how credit is evaluated. That was Tom Brady there, y'all. Super Bowl. All right. So how is credit evaluated? Credit is evaluated in the form of the assessment of what is called a credit report. So anytime you go out and you purchase something or you finance something or you're making payments on something, that information is reported to credit bureaus, which Jason will tell us about in a minute. And that information is combined and assembled within pages and pages of one document, and that information is called your credit report. Your credit report is essentially your resume in the world of finance. That's the best way to look at it. So think about when you go and you want to purchase something and you don't have the cash or the money just to outright buy it, or maybe you want to save your cash and not outright buy it. They want to know how you have handled payments and everything in the past. And your credit report consists of those which are trade lines, the agreements between a lender and an individual or institution, corporation, or whatever. They want to know about your credit history. And that's going to show up on your credit report. But employment history, that also shows up on your credit report, where you last worked, your previous addresses, and then other information that's specific to you. Now, I know you all are in college, so if you have student loans, that would show up on your credit report under the trade line section. But for individuals who have had rough credit histories, things such as bankruptcies and things of that nature, those would also show up on a credit report.
There are three major agencies out there: Equifax, Experian, and TransUnion.
Yeah, so we told you that the credit report is basically a summary of all that information, and they report to those big three that Jason just mentioned. And what we want you all to do now, if you have a minute or two, is go to annualcreditreport.com, where you can access a free copy of your credit report. Now, I know you hear myths and things of that nature that say if you pull your credit, it may ding you or it may negatively impact your credit report. But with this site, that will never happen because this site was actually put out. I'm going to go credit nerd on you all, but this site was put out back in 2007, 2008-ish, and the government actually allowed this site for individuals, consumers, to access a free copy of their credit report 3 times per year. And you can pull one from those big three that Jason just mentioned: Equifax, Experian, TransUnion, or you can pull all three, but you get 3 free ones per year.
Which one do you suggest to pull?
That is a great question, and there's no right answer because it really just depends on when you go in and apply for credit. It's kind of random who they choose, who they have agreements with, and who they work with. So, um, in the example that I have here, I actually pulled a copy of mine through Equifax. So, whichever one you want to choose, they should essentially have the same information, but it doesn't hurt if it's your first time pulling your credit report to check all three. So it's up to you. But you get 3 free ones per year. If you do more than that at this web page, they may charge you, but it's only giving you your credit report, which is the listed information and not your credit score. So
Hey Gilbert, what about something like Credit Karma?
yeah, I was going to touch on it later, but great question, Vincent. So Credit Karma is a site that allows you to probably access free copies of your credit report, and then they give you your credit score. And I'm willing to bet that they give you your Vantage credit score. Is that right, Vincent? Vincent, do you know?
I'll check right now. It's just because I got it actually, I want to say 2 days ago,
Okay,
but
good.
I see one from TransUnion and Equifax.
Yes, yes. Now, Credit Karma is good for consumers. The only gripe I would say I have with Credit Karma is that they give you your Vantage score, which is only used 1 out of 10 times when you go and apply for credit at financial institutions. They say, yeah, you get this free score, but is it the one that financial institutions will have 9 times out of 10 when you go in and apply? That's the question, and it's not. So 9 times out of 10, they will pull a copy of your FICO score. So Karma is good for monitoring, just understanding what's showing up. So it's a good resource to have.
So is it that you can only request one per company per year? Or can I do like 3 from Equifax in the same year?
I actually don't know the answer to that one, Sam. That one, they just say 3 free copies per year. And but I'm willing. Well, I won't say. I don't know for sure. I just know it's 3 free ones. It may make sense to pull the same one every 4 months, or however long, just to monitor your changes. So that's one I'll have to get back with you on. Okay.
When you pulled up your credit report, what did you notice? Was there anything strange, or do you guys understand the report? Because I know it can be confusing for a lot of us at first. So
Well, mine says online delivery unavailable and I have to request by mail.
Yeah. So when Jason and I, as we were going through training, as I was taking the peer financial coaches through training, we noticed that with number of students, if you haven't established credit, or if it's your first time, you may get a message like that saying that you may have to contact them for your free copy. So you may not be able to access it online, but they'll house or host the information that you can get, but you may have to do it by contacting them personally. All right. So if you notice anything strange and it doesn't make sense, just reach out and let us know, and we can definitely help you with that. So here's something I mentioned earlier about credit scores. You have the FICO score, which is the most popular. So 9 times out of 10. So if there were 10 financial institutions that were out there, and you go to 9 of them, more than likely they're going to have your FICO score, which is what they would access to assess your credit worthiness. The Vantage score is also out there, but it's not as popular. Even though I'm more of a fan of the Vantage score from a assessment of your credit overall. I like the Vantage score better, and I won't get too deep in the weeds. But if you have questions, I can talk about it at the end of the presentation. But the FICO score is the most common used, and it was developed by the Fair Isaac Incorporation. Who are they? I don't know, but they developed the FICO score. So
there are many things that can affect your credit score, from payment history to length of credit history, the amount you owed, and like there's also it ranges from the 800 to 350 in the score. So we try to advise everyone to get to the highest level as possible because it could really hurt you, you know, at post college and during college. Yeah.
yeah, if your credit score is not as high as possible, then you essentially pay more for things you have to finance. it's the way the credit system is set up. So, all right. So Jason talked to us about the credit scores and how the weights are assigned at different areas. But now I just want to touch on real quick what the result of that credit assessment is. So if your credit score is high, you essentially pay less in the form of interest. And interest is simply, it's how much they charge you to borrow money. So if you're a lender, I mean, if you're a consumer, you go to a bank and you want to uh, get a car loan. Interest, that's the amount they are going to charge you. That's like their fee. It's like saying, yeah, I'll give you money, but this is how much I'm going to charge you, or this is how much more you will be responsible for paying me back. And interest can come in the form of a fixed rate, which is the same amount, the set rate that's charged, and then also a variable rate where the rate kind of goes up and down. And variable rate isn't as common with auto loans. You'll see that more as an option on mortgages and other types of loans. And then also, anytime you go and you submit an application and you are approved for credit, more than likely they will charge you what is called an origination fee. And that fee is basically what they charge to process an application. So it's another way that the bank or financial institution makes money. And then, not as common, but in some cases, when you get a loan or something of that nature, they may charge you an early a fee for paying it off early. And that doesn't seem right, doesn't seem fair. It's like, oh, I paid off this loan early and you're going to charge me a fee. Well, they want to make money. And usually they make money in the form of interest that's charged each month. But prepayment fees, they are out there. So monitor those. So we asked the question of why would it be important for a college student to understand credit?
Someone in my group was talking about how it's just good to get started earlier since you're going to need it as soon as you graduate. So you might as well learn how to do it correctly and start building that now.
Exactly. That is the perfect response. Yeah, the earlier you can start, the better. And there are some simple things you can do while you're in school to start that process. So that's what we're going to go over. So credit, essentially, it can make or break your future, as we've discussed earlier. So after you graduate, you're faced with decisions, and decisions about employment, which again, they can look at your credit, whether or not to buy a car, whether or not to buy a house or condo, whether or not to buy furniture for your apartment or home. If you want to buy appliances and you don't have the cash, then you may have to finance those. Same with the apartment. If you're buying a house or condo and you don't have the money to just put down, then they're going to look at your credit. And then also, once you get that new car or that new home, you've got to get insurance. So these are areas in which credit applies directly to a college student. And it's much of what I mentioned earlier, except we're kind of tailoring it to you all.
A big problem in credit is identity theft. There's a lot of identity theft involved that a lot of people go through, and it's important to protect yourself from it. The best time to start building credit is now. It's the best time to set you up for success in the future.
Went backwards, sorry, y'all. All right. So as Jason mentioned, the best time for you to start building credit is now. And here are 5 things you can do. So if you have pen and paper or some form of some way of taking notes, I'm going to go over each of these areas to show you as college students what you can start doing now to start building credit or to establish credit, either or. So the first one, pull a copy of your credit report. And some of you all may not have any credit history at all. So you may get an error message or something like that. And if that's the case, you may not be able to go and apply for credit and receive an approval. So monitor your report, see what's showing up, see if it's positive or negative. That's almost like that's going to let you know what's showing up and what's not showing up, or if your student loans are showing up, etc. So monitor your report. That's the most important thing. Number 2, so if you go and apply for a credit card and if you are turned down, then they may offer you what is called a secured card. Now, I know this may be new to some or others, it may not be, But what a secured card is, it's basically a way for a bank or financial institution to give you a credit card without taking on risk. Now, what they will require of you is to put money into a savings or checking account, and that money will sit in the account, and they will issue you a credit card with a available balance or available limit that matches how much you have in that savings account. So it's like, hey, if you give us money, we will give you a credit card, and as you use that card, um, we have these funds just in case for some reason someone doesn't pay back. So it's kind of a way for the bank to offset the risk of someone new coming in without a credit history, and for them to allow you the opportunity to build up credit. So you would use the card as you would a typical credit card, and you can start building up credit. So if you all have questions about that, or if that explanation needs a little more, you're welcome to reach out to us. But a secured card is a great way for a college student to start building up credit. Number three, a credit card can help with building up credit. Credit card is also dangerous if not used the right way, because interest can be overwhelming. But if you're going to use a credit card which reports information to the credit bureaus, then you must use it in a revolving fashion. So just by having a credit card alone, that's not going to build up your credit. You have to use it in a revolving fashion, which is month after month after month after month. Now, what I suggest is once a month, you buy gasoline, you buy a Gatorade, you buy something on your credit card, if that's what you're using to build up credit. You buy it, you pay it off. It can be the same day. And then that information is reported to the bureaus, and then you're not paying any interest. So you avoid the interest. And you do that one time per month if you're using a credit card to build credit. And you'll see that your credit score will go up because you're building a positive payment history, which Jason mentioned is it has the highest weight as far as your overall credit score is concerned. So use a credit card in a revolving fashion to push up your credit score. So hopefully that made sense, but that's how you use a credit card. Number four, something else you can do is tag along with a parent. So what happens is you go to a parent or guardian and you let them know that, hey, you want to start building up credit, and they can add you as an authorized user on their credit card. And as they use that credit card, your credit score goes up. Now, this does require trust between whoever you go to, whether it's a parent or guardian, but it's an easy way for a college student to kind of build their credit score up. And if you're still learning how to manage your finances and things of that nature, you may not have to take on that responsibility of managing that card. So it's an option. Now, it's of course something you would discuss with a parent or guardian. And then number five, the best way to build up credit is anytime you realize that someone's reporting your payment history or information to the credit bureaus, then you want to make sure that you pay your bills on time. So pay bills on time. That's number five, because that has the highest weight as far as your overall credit score.
What are some takeaways from today? I think it's important to protect your identity. Um, that's a big problem that many people have, a lot of students and adults as well. Check your credit report constantly. I think it's important that, like Gilbert said, that you can check it three times a year. And most importantly, start working on your credit score because that can set you up for success in the future.
All right, so here are a few resources and links that you can go to and access some of the information we have shared. You can visit annualcreditreport.com. That's where you go and get free copies of your credit report. Remember, you're limited to 3 per year. However you spread those out is totally up to you. Visit myfico.com. They will also go over a lot of credit information. Bankrate.com is an excellent tool for different finance calculators and information regarding personal finances. And then you also have consumerfinance.gov, another great webpage.
So let's say we did get a credit card or a secured card. Do you suggest, well, specifically when using a credit card, to buy smaller things each month, like just a couple small things?
Yes, it could be one item that's real small, something simple that you can pay off immediately. And as long as there was a purchase and there was a payment that occurred within the same month, you get a green check mark that goes to your credit report. Well, that's how it's reported as positive information, and that will build up your credit report, build up your credit score. It's just activity. They don't monitor how much activity per month is on a credit card. They just want to know that there was some sort of activity, meaning one purchase, five purchases, or how many ever. So it's not necessarily the amount of items. It's just as long as you purchase something.
So I had a question going through the credit report website. This may be a bit of a stupid question, but
No stupid questions.
it's telling me that I have a bank card, right? And I do. And it's asking me who the credit provider is for that account. Is the
Mhm.
credit provider the same thing as my bank name, or is that a different thing?
It should be the same as your, well, no, it could be MasterCard, Visa. That's the provider that your bank goes through. So it could be
Okay.
a credit union or someone else.
Okay, so Visa is one of those.
Yeah, Visa. Yeah.
Okay, cool.
Wait, okay, I have a question. So I have automatic payment for my credit card each month, but each month, even though I say that I want like the whole portion to be taken away or like to be paid off, they only take a portion of it each month. And so does that affect your credit score?
No, I mean it's positive payment history. As long as you're making a payment and you're making a payment that's more than the minimum, then it's positive payment history. Meaning you had a bill due and you paid it, and you mentioned that it's not paying as much as you would like each month,
Yeah,
or
I
is
just
it?
want like the whole amount to be taken. And it seems to, even if I sign up for like the whole amount, it doesn't take the whole amount.
Oh, so yeah. I mean, it's not gonna to negatively impact you because you are making the payments on time. What it can impact is if you keep a large balance on there and you wanted to pay that large balance off, but it only pays a small portion, then your credit utilization could go up, which means that you're using more of your available balance, and that would negatively impact your credit score. Does that make sense?
So it's okay as it is, or should I just?
I mean, you can contact them and let them know that it's not paying it off. But remember, it's the month after month revolving history is what pushes up your credit score. Does that make sense? So you want
Oh.
monthly activity, meaning a payment. And if you have a balance and you're paying month after month after month, that works. I mean, there was a payment submitted. It will be reported to the credit bureaus or credit reporting agencies. So that will
Mhm.
be positive. So if you're using that to build up credit, that's an easy way to do it. You have automatic payment coming out each month. There's a balance and it's being paid. But the only thing you want to do is avoid doing that, keeping a large balance because of interest. So you have to kind of
Oh,
weigh
because
that.
my bank right now, it's like the first year there's no interest rate, so I should be okay.
Oh yeah, yeah. You won't pay any interest. So yeah. So make sure there's payment each month and you'll be fine.
So from my credit card, I get like a statement each month, and on that, I have like a credit report. Is that going to be the same thing that I would get through the annual credit report website, or is it going to be more information on there?
That should be the same thing unless they're summarizing
Okay.
it. Now, if they're summarizing it, not providing payment history as far as October, November, December, January, February, do you see those
Right.
months that show up?
I just see the month for this last statement. I don't like see them all at the same time.
Oh,
I get a
so
statement each month, so I don't see it like compounded.
so they're showing you like a snapshot, I guess, or a summary of your credit
Right.
report.
Right.
That's what they're providing.
Okay. Okay. Awesome. Thank you.
All right, you're welcome.
So is there an easier way to get the report online without getting it by mail? Like if I built my credit up, then would I not need to get it by mail? Because that just seems really kind of annoying to me that I can't see it online, you know?
Yeah, you should be able to see it online, but if that webpage, annualcreditreport.com, is not working, then you should be able to reach out to them via phone and just say, hey, when I go and apply, when I go and try to pull up a copy of my credit report, it's telling me that I have to access it by mail. but I'd rather do it online, and they may be able to change it for you, or
Okay.
fix whatever the issue is.
Do you think it's just because I specifically used Equifax, for example? Like if I tried one of the others, would it be the same exact thing, do you think? Or
You could try. Now, everything is supposed to mimic, but it doesn't. So that's why monitoring all three can help. So you could try one of the others, but if you realize that one of the others is giving you the same message, then you would want to reach out and figure out why they won't allow you to access it online. And in some situations, it also could be something that your parents set up for you, where they can freeze your credit or put a message on the account where no one can access your report. So you can call them, call Equifax, or call whoever you're trying to pull the copy of the credit report from, and they can fix it for you. You just have to verify your information.
okay. And then one last general question. How would you go about getting a first credit card? Because I have a debit card that I use, responsibly, and it would be nice to just have that go towards building up my credit instead. I just don't know how to start.
Exactly. Jason, you remember this one from training?
On the student credit cards, right? Or the secured credit card.
That's one option. But the first place you would go to is whoever you have your debit card through.
Yeah.
So whatever bank or financial institution you have a relationship with, it's always a more favorable situation for you. So if you're the bank that you started your first account with, when you was in high school or whenever, that will be the first place to go.
Okay, so I just go to them and ask them about how to set that up.
Yes, you can. If it's not online, I would suggest call your bank and just say, hey, I'm interested in getting a credit card to start building up my credit. That's the only thing I want to use it for. Do you have a specific card that's geared towards students? And then they will give you their option there.
Okay. Well, thank you so much.
All right, thank you.
You could stay in contact with us by scheduling an appointment, talking to a personal finance coach at the Office of Financial Aid and Scholarships. We'll talk about investing, budgeting, and more.